The Meaningful Money Handbook. Everything you need to know and everything you need to do to secure your financial future. Pete Matthew, Harriman House, 2018. Many useful tips to get practical and applicable advice to better manage your financial situation. Learn to spend less and better. Understand the mistakes we often make when it comes to money. Recognize the mechanisms that lead us to make them and correct them. The author. Pete Matthew is a certified financial planner and director of Jackson's Wealth Management. In 2009, he decided to publish short videos explaining the basics of economic management to ordinary people. The videos quickly became very popular, and in 2012, he decided to start the Meaningful Money podcast, which soon reached over 1.5 million downloads. With over 256 episodes broadcast, Peter has helped tons of people take control of their financial situation. Many of the practical tips found in this book are specific for the UK and refer to government laws and plans that are not found in other countries. What follows are the general recommendations that can be applied regardless of your country. Everything we need to know and do to become wealthy. Whatever your definition of wealthy is, it takes time. Becoming wealthy can be a goal. If we pursue it deliberately and carefully, we will learn some good habits that, applied constantly, will help us not only to build financial stability, but to not squander it when we think we are safe. Everything you need to know. When aiming at an objective such as financial stability, it is necessary to adopt the right mentality, which is based on some concepts that we must always keep in mind. 1. The world is full of distractions. We all have our weaknesses and temptations. The trick is to be aware of them and be ready to face them. 2. Well-being belongs to those who are careful. Nothing valid happens without planning and commitment. Building financial well-being is simple, but it is not easy. 3. Nobody cares about you more than yourself. It's up to you. You are solely responsible for your future well-being. This is good news because no one else would take as much care of it as you will. Everything you need to do. It's time to take control of your economic future. Here are some steps to get started. 1. Visualize your future. Take a piece of paper and write down what well-being means to you. Imagine a future in which you will have achieved this goal and describe it. 2. Be determined to win. It all starts with your decision. If you really want your future to be as you described it in the previous step, make the decision and see it through. The 3 steps to economic success. There are 3 basic steps that each of us must take to achieve economic success. They will be slightly different for each of us, but the basic structure remains unchanged. If you take these steps and keep repeating them, you will reach your goal. It won't be easy. It will require a lot of work, but the mechanics are simple. 1. Spend less than you earn. This is undoubtedly the fundamental thing to learn to do. There are 2 ways to do it. You can spend less or you can earn more. The best way is to do both. 2. Insure yourself against disasters. As much as this book can help you take control of your finances, there are things in life that you cannot control. Fortunately, there are ways to mitigate the effects of catastrophic events like illness and death, such as insurance and emergency funds. 3. Invest wisely. Learning to manage expenses and eliminate debts are fairly simple things, but when it comes to putting money away for the future, we are inundated with a myriad of possibilities, and this often leads us to do nothing. This book cannot tell you exactly what you need to do in your situation, but it can provide you with the information you need to deal with these decisions. How to spend less than what you earn. Spending less than you earn is the first of our 3 steps, and it is the foundation for everything that will follow. If you can stick to this rule, everything else will follow. It's about developing good habits. The nice thing about habits is that they quickly become part of our natural instincts. There are two things you can do to achieve this: spend less or earn more. The ideal thing is to do both. Having a budget does not mean tracking your expenses. It is a matter of deciding in advance how the revenue will be used. Learning to manage your money in this way means learning to know yourself and avoiding those behaviors that lead to unnecessary expenses. An effective way to control expenses is to have two bank accounts. One dedicated only to expenses, in which to keep only the necessary money to pay bills, mortgages, and recurring expenses. The second account instead will be the one where we keep the money for our daily expenses. Each week, compare the actual costs with those scheduled in the budget. You can check how much you are spending more or less and adjust non-recurring expenses. Debts are a problem that we all have to face sooner or later. The only way to get rid of a debt is to pay it off. Start by making due payments for each type of debt and try to pay off minor debts first. By doing so, you will soon come to extinguish the bigger ones and finally free yourself from this uncomfortable situation. Try to organize your bill, mortgage, and debt payments the day after your payday if you get a salary on the same day every month. By doing this, you will avoid unnecessary spending that comes about when your bank account looks more flush. In life, bumps in the road are inevitable. Fines, breakdowns of household appliances, and unexpected expenses. Being aware of them and accepting them is the first step in dealing with these problems when they arise. The first rule when something unexpected happens is not to panic. Plan ahead how you intend to handle such a situation so that you know what to do when it arises. Avoid situations that put you at risk. For example, if you know you tend to buy things you really don't need when you can't sleep late at night, turn off your PC and phone and read a book. Learn from your mistakes and try to make sure that you don't make them again in the future. Which situations is it best to get cover for, and which characteristics should a good insurance plan have? Our financial situation is like a home. If the foundation is solid, it will survive even in the event of a disaster. Insurance is one tool to help with this. The problem with insurance is that many perceive it as a waste of money. But the entire insurance system is based on the principle that the payments of many go to cover the disasters encountered by few. The three most common catastrophic situations against which it is good to insure are 1. Premature death. 2. Diagnosis of a critical illness. 3. Inability to work caused by illness or accident. None of these is a pleasant situation to think about, but we have to estimate the damage they would cause if they arose. This goes from knowing what would happen to our debts, would they pass on to any partners or heirs, to who should manage our recurring expenses, and what would happen to our savings. Life insurance guarantees us that, should we die, terms and conditions vary according to the policies, a certain sum would be paid to the beneficiary. It is good to understand what each policy offers in terms of protection, payments, etc. Determine what type of coverage suits your situation. Someone who is single will have different needs than a person with children and a family. Then there are insurance policies to protect our income. These serve to protect us should we lose the ability, due to illness, accident, or other, to earn an income. The policy that we require will depend on our profession and our position, whether we are an employee or self-employed. Different policies offer different levels of coverage. Before signing up for any insurance plan, there are a few tips to follow. 1. Get several quotes and compare them. Put the various brokers in competition with each other. They will be working to sign you up, and you have only to gain. 2. Keep a written summary of up to 1 page, which includes each policy and what it covers. 3. Review your coverage schedule regularly. If your situation changes, you may need to make some updates. The last element to consider with regards to unpredictable disasters is your will. Nobody wants to think about their own death. but establishing what will happen when we are no longer there can help those we leave behind not to have to deal with further sorrows. No matter how young and fit you feel, the time to make a will is always now. Contact a professional who can guide you on this path. It may seem like money spent unnecessarily, but it is not. Decide whether to save or invest, and the possible investment risks. Once you have successfully created a budget, managed to put aside emergency funds, and have taken out insurance against unexpected and catastrophic events, the fun moment comes. Invest. A misconception that many people have is that having lots of money in the bank is an effective way to save. The money left in the bank, however, does not generate an income. It simply sits there. The only benefit we can get from money in the bank is the pleasure of looking at a large number on our bank statement. There are many options to invest, and they vary from country to country and from market to market. However, there are some considerations that we can make that apply to any type of investment. First of all, it is good to understand the difference between savings and investment, that is, time. When we think short-term, from 3 to 5 years, we mean things such as Christmas expenses, a holiday, etc. For the long term, we mean things like buying a house, marriage of our children, or most importantly, our retirement. Whether you choose to save or invest, the important thing is always to have a goal in mind. The technique of saving as much as possible is not efficient because we don't know what we are saving for. A goal must be measurable and must have a deadline. Investment is an activity that comes with a risk component. This is a term that often frightens us, but we need to understand its meaning. If we decide to save, our capital generates interest, which is usually low. By investing, we are committing the capital for a longer period, and when the investment expires, we will have an income. One thing that must always be kept in mind is that the invested capital will fluctuate. Many novice investors get scared as soon as they see the value of the investment go down and withdraw it. That is the moment that losses occur. The investment, in fact, generates income or loss only at the moment of expiration or early withdrawal. The rules to follow in order not to lose the goal of being wealthy. Starting to build your own financial well-being is a very exciting thing, but in the long run, we risk losing sight of the goal. Here are some tips to stay on course. 1. Increases. Increase, even slightly, the money you put aside every month. The impact that such a small increase will have on the end result is immense. 2. Do regular checks. Set a time of year to review your budget based on your new situation. If there have been major changes, reviewing your plans means you won't have to worry about them constantly. 3. Involve your partner. A great time to do this is during the annual review. 4. Be aware of your behavioral bias. Knowing your limitations and weaknesses makes you stronger and less inclined to make mistakes. When should you contact a financial advisor? The advice in this book is meant to be a foundation on which to build your economic future, and most people can do it themselves. In some cases, however, it is advisable to contact a professional who can guide us. Those approaching retirement, for example, could ask for help to withdraw their savings and investments. Anyone who unexpectedly receives a large amount of money, such as an inheritance or a win, could benefit from the support of a financial advisor. Time to reach our goal. Remember the 3 basic steps we talked about. Following these long-term steps can ensure that you reach your goal. Remember that you don't have to do everything right away, but that the right time to start is now. Quotes. Money exerts an incredible power over people. So it is essential, right at the start, to have your head in the right place. But if disaster strikes and our foundations are made of sand, our whole financial lives can be ruined. To avoid this, we need to lay a solid foundation. Very few, if any, of the financial decisions you make are irreversible. So if you make a mistake, you can pivot and set off on a different path. Take-home message. economic well-being depends on us. We must take our financial situation in hand and learn to manage it better. By following 3 basic steps, we can learn not only to manage expenses in an optimal way, but also to protect ourselves in the event of catastrophic events. Once the first 2 steps are complete, it's time to think about investment. After all, keeping money in the bank without investing it does not create financial well-being.